Hi everyone, welcome to my YouTube channel which is Explore Yourself, Banking and General Knowledge etc. Today I will discuss about group discussion topics related to the internal promotion examination for banks. Welcome to part 23 of my Path to the Corner Office 2025-2026 series where I break down real bank promotion exam questions and give you clear practical sample answers about group discussions to help you climb the career ladder faster. Today's group discussion topic is NPA management and recovery strategies at branch level. Introduction. Non-performing assets (NPAs) remain one of the most critical challenges confronting the Indian banking system. While policy frameworks, regulatory guidelines, and centralized recovery mechanisms play a vital role, the real battleground for NPA control is the bank branch. Branches are the originating point of credit, the first line of monitoring, the most crucial unit of recovery efforts. Therefore, effective NPA management and recovery strategies at the branch level are decisive for asset quality, profitability, and overall financial stability of banks. For a bank promotion exam, this topic tests candidates on credit appraisal, monitoring skills, legal knowledge, recovery techniques, customer handling, and leadership at branch level. Understanding NPAs and their significance. An asset becomes an NPA when interest or principal remains overdue for more than 90 days. NPAs adversely impact profitability due to interest income loss, capital adequacy because of a higher provisioning, liquidity and lending capacity, reputation and market confidence. At the branch level, rising NPAs reflect weak appraisal, poor monitoring, ineffective follow-up, or external economic stress. Role of branch in NPA management. Branches are responsible for credit appraisal and sanction, post-disbursement monitoring, early identification of stress, recovery and rehabilitation, legal and non-legal recovery actions. Thus, branch level vigilance determines whether a loan remains standard or slips into NPA. Preventive strategies. The first line of defense. Strong credit appraisal. Effective NPA management begins before sanction. Proper assessment of borrowers' cash flows, verification of KYC, financial statements, and credit history. Industry and sectoral risk analysis. Realistic assessment of repayment capacity. Avoidance of overfinancing. Branches must resist target-driven or pressure-based lending, a common cause of future NPAs. Poor documentation and security creation. Incomplete or defective documentation weakens recovery. Proper charge creation with ROC or SARSAI. Adequate collateral valuation. Registration of mortgage and guarantees. Ensuring enforceability of security. Branches must treat documentation as a risk mitigation tool, not a formality. Post disbursement monitoring. Continuous monitoring helps detect early stress. Tracking end use of funds, monitoring account turnover, regular stock and book debt statements, periodic inspection of units, watching early warning signals like check returns or frequent overdrawing. This enables early corrective action before default becomes chronic. Early identification and SMA management. Special mention accounts SMA. Early recognitions through SMA classification SMA 0, SMA 1, SMA 2 is crucial. Delays of 1 to 30 days indicate emerging stress. Branches must intensify follow-up. Immediate borrower engagement is necessary. Early resolutions at SMA stage prevents NPA formation. Customer engagement and counseling. Branches are closest to borrowers and can understand genuine business difficulties. differentiate between willful defaulters and stressed borrowers, offer restructuring, rescheduling, or moratorium where viable. Empathetic but firm communication often yields better recovery than legal action alone. Recovery strategies at branch level, regular follow-up and persuasion. The simplest and most effective recovery tool, regular personal visits, telephoning and written follow-ups, building pressure through relationship management. Many small NPAs can be resolved through persistent persuasion and negotiation. Recovery camps and drives. Branches often organizes one-time settlement, OTS campaigns, special recovery drives, lok adalat referrals. These methods help clear small and medium NPAs quickly, improving branch performance. One-time settlement (OTS). OTS schemes help recover dues where full recovery is difficult. Useful for chronic NPAs, reduces litigation cost, improves balance sheet. However, misuse of OTS can encourage moral hazard, hence branches must ensure policy compliance. Legal recovery mechanisms. SARFAESI Act. SARFAESI empowers banks to issue demand notice, take symbolic and physical possession, sell secured assets without court intervention. Branches must ensure documentation is SARFAESI compliant, follow timeliness strictly, coordinate with authorized officers. Recovery tribunals, reactive. For larger exposure, filing recovery applications, monitoring case progress, ensuring representations. While effective, DRT cases often face delays, making out of court recovery preferable where possible. Lok Adalats. Lok Adalats are effective for small loans, retail and agricultural NPAs, speedy settlement. They reduce legal cost and help recover sticky accounts. Handling willful defaulters and fraud accounts. Branches must identify willful defaulters who have capacity but refuse to pay, diversion or siphoning of funds, fraudulent activities. Actions include reporting to higher authorities, restricting further credit, initiating criminal proceedings where applicable. Firm action against willful defaulters strengthens credit discipline. Staff accountability and training. Accountability mechanism. Accountability ensures responsible lending, review of sanctioning decisions, fixing responsibility in cases of negligence, preventing reckless lending. However, excessive fear of vigilance may lead to over-conservatism, impacting credit growth. Skill development. Branches need trained staff in credit appraisal, legal recovery, negotiation skill, stress assessment. Regular training improves recovery efficiency and confidence. Use of technology at branch level. Technology enhances NP management. Early warning systems, data analytics for stress prediction, digital follow-ups and reminders, centralized recovery dashboards. Branches should leverage technology for proactive rather than reactive management. Challenges in branch level NPA management. Despite best efforts, branches face challenges, economic slowdown affecting borrowers, external factors like natural calamities, political and social pressure, legal delays, limited staff, and high workload. Hence, NPA management must balance firmness with practicality. Improvements for strong branch level NPA management improves profitability, enhances customer discipline, strengthens bank's balance sheet, builds credit culture, improves branch and officer performance ratings. Arguments against excessive pressure on branches. Overemphasis on recovery may hurt genuine borrowers. Fear of accountability may restrict lending. Relationship banking may suffer. Staff morale may decline. Thus, a balanced approach is essential. Moving forward, best practices. Focus on prevention rather than cure. Strengthen appraisal and monitoring. Encourage early regulation mechanisms. Use legal tools judiciously. Promote ethical recovery practices. Align recovery targets with ground realities. Conclusion. NPA management and recovery strategies at the branch level are the cornerstone of a healthy banking system. While policies and regulations provide the framework, effective execution rests with branch officials. A combination of strong appraisal, continuous monitoring, early stress detection, empathetic customer engagement, and firm recovery action is essential. For sustainable banking, branches must move from reactive recovery to proactive risk management. Ultimately, successful NPA management is not just about recovering money, but about maintaining asset quality, customer trust, and long-term financial stability. Thank you very much for your patience. Request for like, subscribe, and share.